Hey guys, just wanted to do a video here today on Tesla again. Um, I know that I've made quite a few lately, but I think 2018 is going to be kind of an interesting year for Tesla, perhaps 2019. Um, and I had some other information that came through in regards to tax credits, as well as some interesting information in regards to Elon Musk, the CEO, that you'll definitely want to hear later in the video here. So the question is whether or not Tesla's going to be hitting a roadblock in 2018. Um, it's being reported that the new tax plan through the Trump administration may completely eliminate this $7,500 tax credit. Um, but it's actually worse than it sounds because in 2018, maybe 2019, the subsidies will probably stop for Tesla because what a lot of people don't know is that under the current federal tax plan, the $7,500 reimbursement every time they buy an electric vehicle um, is based on the number of vehicles that are actually um, produced by each manufacturer. So that was under the current plan. As you can see here, once the manufacturer sells $200,000 cars. So based on what we're seeing in the production of Tesla, since we're specifically talking about Tesla here, we're looking at probably 2018 that will stop. Um, and if you want to look at what happens, uh, here's one example. Um, there is some caveats with this, and this is not any, proof, but it just kind of displays my point here. That when they removed their $5,000 electric car rebate, sales fell from about 1,400 a month to fewer than 100. Um, there's also a Denmark here as well. They're going to be reinstating it, looks like. In 2015, they rolled it back and sales basically crashed. So some people might say, well, Tesla, the bulls might say Tesla, they're a luxury vehicle. The rich buy them, the people that care about the planet, and I won't argue with that. But if you look at Tesla's business plan here, what we're looking at right now is producing the Model 3s, and that's not the vehicle for the rich and famous. That's the vehicle for the everyday driver, and that's what's going to make electric cars relevant, right? Um, but if you lose that credit, that could be huge, and we see what happens here. Usually, when the credit is rolled back, um, so that's making the assumption that there's going to be no negative impact on the vehicle sales. Sorry, let's make that assumption. Let's say that Tesla, for some reason, is immune. Well, as I told you in another video here, they're basically having extreme issues producing these Model 3s. Um, they basically, this was back in February, and this never even actually happened. In the last 3 months, they've only produced 260. Yeah, that's right, 260 cars, right? So their Tesla's now saying that they have ample money to produce 5,000 Model 3 sedans. I believe that's a week by the end of March 2018. Whether or not that's going to happen, I don't know. But it takes significant financial capital. And that's the next thing that we should look at here when considering Tesla. They're blowing through over $1 billion a quarter. That's right, $1 billion a quarter, guys. So that's about $8,000 a minute. Someone did the math, and I was researching that the other day. So when we look at the financial viability of the company here, by 2018, they're going to roughly need $2 billion just to stay afloat. So they just raised $1.8 billion in bonds, that being the debt markets. But those are already underwater, so they're valued less because these were junk bonds on Tesla here. If you don't understand too much about how a company works and debt and equity, I have another video talking about the stock market, what a stock is, if you want to watch that. So when you look at the bonds, I'm thinking it's not really viable considering what happened. So probably equity is more realistic, issuing more shares yet again here, but then dilution occurs. And Elon himself actually owns 20% of Tesla, so that will hit him as well. But the question is, how long can they do this, right? This is where their cash to drive production is happening, right? It's costly. The Model 3 is costly, and now we have plans about the Semi, which is a completely different ball game, and then the Roadster as well. Um, so I kind of maybe I'll look at this first. Like I was kind of wondering why he's so ambitious with, we're not even producing the Model 3s. Now we're talking about semis, which is completely different. Then after the semis, we're talking about another car. And these are difficult things to do. They're costly. I mean, you look at companies like Ford, they've been, perfecting this for 100 years, and the margins are slim, right? So if I actually look through here, this is their last quarterly financials in September. I might have missed this. Sorry that I didn't have this ready for you guys. But essentially what we're seeing here, that I don't know if a lot of people know or not, and I probably went right by it, to be honest, is that Elon's compensated based upon hitting these objectives. So people that say he's just interested in saving the planet, blah, 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 well, maybe he is, but I guarantee he's probably financially motivated as well. And I was kind of thinking to myself on the last release, why? Why is he being so ambitious already? I mean, at least be able to produce the easy Model 3 before you start talking about Semi. Like that's completely different ball game, right? So I just can't believe that I can't see this for you guys here. But essentially, it's not giving you a forward estimate of what's going to happen here. It's just telling you about what he got based upon the Model X, automated sales, cost of revenue. I just find this very peculiar here. I can't find it. Anyway, well, this is kind of how you can look through. This can be a little lesson here, how you look through this. There's notes to the notes is probably where you're going to find the information like that, right? So if you click on it, it'll go to the notes. This is some stuff above, warrants. This is an acquisition they had. Goodwill, fair value instruments. Interest expense. A lot of this stuff is really kind of redundant. Anyway, I'm not going to spend any more time on this. I can always bring up the link if anybody's interested. But he's getting compensation based on levels. Certain amount of production, starting another production of X or S or whatever it may be. So that's how he's actually getting stock options. So the question again against the financials, I haven't went through this a lot here, but I'm going to make a video for you guys one day on how to read these effectively and what they mean essentially. But they need to start generating some profit, right? Some of the people that say, well, they're reinvesting everything back into the company. No, that's not what they're doing at all. I mean, they're reinvesting in the company through debt, through equity, through getting money from people, right? But that will run out. That won't be here forever. So the question is, how can they rely on themselves? So they have significant revenue. We have leasing here too. So about $2.3 billion comes in, right? Now, if you look at the cost of these, again, very slim here. If you look at automotive sales, 2 billion, and you look at automotive sales, the cost of that, this is basically the cost of goods sold, the parts and whatnot, way more than that. As you can see, the margins are slim. The margins are very slim in auto manufacturing, right? Even with this, that is as well. We won't look at their energy and generation storage. So basically, their cost of revenue is 2.5 billion, right? So that's putting them the last quarter about $500 million down. So how are we going to change that? We could up this. Like, this is what most people will say. Well, Tesla's going to generate a lot more money because they're going to sell a lot more cars if they can produce them, of course. But what a lot of people don't understand as well is you're looking at this, right? But as soon as you ramp up your production, your cost of that is going to ramp up too, arguably in a equal fashion or more in Tesla's case quite often. So where you can generate a better bottom line or a profit is by being leaner or to get economies of scale, right? But that's very difficult to do. Like I said, it's a tough business. Ford is really perfected at some of the other big manufacturers, and they have slim margins, right? So you look, well, what else could we cut? Well, we won't talk about the energy generation because its margins look even slimmer for now. You can cut research and development. Well, Tesla shareholders don't want that. I mean, this has been going up slightly. Then there's no future products. So then what's left? Selling general and administrative expenses. Well, cut salaries of executives and marketing. Well, they already don't market. So, I mean, I don't see a lot of places they can cut. So to me, the only way that they can significantly do this is, like people say, is to ramp up production and sell more. But once they sell more, they're going to be spending more. So can they be profitable? That's the question. And I'd be really interested to know if you guys have any thoughts on the matter, because a lot of the bears or the bulls will say, well, he's going to save the world and you just don't understand what's going on, blah, blah, blah. And they never really give a valid argument when you're talking about financials. I mean, I'm sure he has great intentions, and I think his products are amazing. The cars are amazing. This Tesla or this semi looks amazing, but at some point you need to be able to generate revenue, or profit rather, and be able to stay afloat and not just keep running through cash, right? So you couple that with the things that I've talked about before, the fact that are they going to be selling more? This is going to be gone, in my opinion. What's happened before, and basically there are issues that could have been predicted because manufacturing vehicles is difficult to do. Then you look at some of Elon's motivations, probably financial, and you start wondering how successful is this company going to be, especially in 2018, 2019, when we really see things change. But I didn't want to make this video too long today, so I'll stop it here. But I'd love, again, to hear you guys' comments on this. I'm sure I'm missing some things, but I'd like to know some of the drivers, why people think that the company can be successful, and how they're going to cut expenses and generate more revenue in disproportionate amounts. Anyway, that's just a quick video for today. Turned out not being so quick. But leave a comment down below. Feel free to subscribe. And I will see you guys in the next one. Have a great day. Bye.